Hey YouTube, what's happening? Chris here. I want to bring you all a very quick little update on Bitcoin. Right now we're at 47.95. We're down 3.6%. I'm just going to give you some targets, upside, downside, some of the things that I'm looking at, key areas that I want to see hold, and also some key areas that we got rejected from as well. So we're going to dig into this, guys. If you like what we do here, like, subscribe, hit that notification bell. We'll just keep bringing it to you. It's amazing to see this trend line break that we've been under for so long. And people, I know a lot of people would go, oh, well, it's a trend line break, this or that. Guys, this trend line, and let me zoom out for you, this was intact for, let's see, all the way since February 17th, 2018. Think about that. And we broke out of that on great volume. That's exactly what needed to happen. And we needed it to get through that $4,500 area. So that's amazing. And what I'm going to do, I'm just going to get this Fibonacci off here. We'll put that back on when we zoom in. But I wanted you to just see this stepping back. Do you see each time we fell? Right there, lower high. We fell down, lower high. Just like that. And then we just, for the longest time, what was it, guys? 2 or 3 months? Yeah, right in that range. It was around $6,000 or so. And then all of a sudden we just fell off that cliff. And now you're seeing it made up on the backside. But we broke out of that trend line, which also got us up above that 200-day moving average, which we could have had a lot of trouble with if this wouldn't have came on high volume. This trend line break, if it came on low volume, subpar volume, we would have rejected off the 200-day moving average. So now we're up above it. And now what we have to see is if we turn that into support. All right, remember, that would be a strong overhead resistance. We want to see resistances turn to support. We want to consolidate on them, and then we want another move higher. Higher highs, higher lows. Can't emphasize that enough. But the volume was spectacular. I'm so happy to see that. Now, zooming in on this. This is the actual purpose of the video here. Guys, that other stuff, I was just want to step back just so you could see. All right, so these wicks here, that's profit taking. That's professional traders. They're taking their profits. All right, and I know some people who don't really understand reactions, they don't realize that the market, to be able to go up, it needs to have these breathing periods. So just like a human being, breathing in, breathing out. So the market will blast up like this, and then we're going to see if we come back down and test this 200-day moving average before making another move up. All right, but when you have all these wicks, that's profit taking. Now you're almost seeing a rickshaw man doji here, if you can see that. From yesterday and now today, we have basically a bearish engulfing candle forming. Now we're going to have to see where the day closes, but those are 3 significant wicks there, wicks of rejection. So that obviously means we need a cooling down period. Now in terms of the Fibonacci, let me put this on here. So guys, I'm going to go from this move when we broke out of the trend line. That's the move I'm measuring. Other people can do it from other places, and there's other places to do it from, but that's what I want to take. I want to take the move out of that trend line. All right? So what we're looking at now, we're at the 0.382. You can definitely get bounces off that. All my books say the 0.382, the 0.5, and the 0.618. Those are the hot spots after a big move like this where you'll look for that retracement before potentially moving higher to the upside. So what I'm looking at here, I'm looking at the 0.382 and that 50 especially right here. Okay? And that's around 4,627. And I think that would be a great spot for a retracement. Remember, guys, it's just me thinking. I'm just throwing this out here for a retracement. Obviously, it's the 0.5, so it's very strong. It would be a nice throwback. And also, it's at that 200-day moving average, which we will have to back test. I promise you guys, you can't just run through these and never see them again. We're going to have to. We broke through it. We're going to have to come down, test this, consolidate at some point. Maybe it's even farther down the road, but we're going to have to back test that 200-day moving average. In my opinion, there's no way around it. We have to see if we can get strong support, if the bulls are going to stand by it and get up through it. That's what I'm looking at. But basically, guys, and I'll tell you what I did. So I missed this big explosion move. I was basically in cash right in here. I was waiting to see what was happening. I was saying, all right, if we break to the upside, I'll try to jump in. If we break to this downside, I'll jump in. Had some family stuff going on. Missed this move to the upside. So I said, all right, you know what? This was a massive move. I'm going to get in on a short now. I'm looking at the 4-hour RSI at 93. I think it was 93 or 95. So I said, all right, I'm going to jump in. So my price, guys, is 4,000. 900 and I think it was 47, and then I saw the price go all the way up to 53 while I was in it, okay, because we were up high, and I played just a small amount. It wasn't anything crazy, so I said, you know what, I'm not going to put a stop loss in because I won't get liquidated. My liquidation price is further down the road. I'm just going to let this calm down. So I saw it go all the way up, probably, yeah, about $300 higher than when I got in, and now it's pulling back just like I was hoping for. So that's what I was looking for, guys, was just this big retracement due to how far and how fast we pushed up. We went from around $4,000 whatever up to $5,350. Okay, so there's going to have to be some profit taking, and since I missed that move, I jumped in. It was like right around in here, guys. Now what I've learned from this though is, now I'm going to mark this down in my book. I learned a lesson, and I learned a valuable lesson. When you break out of these things and you really have a pump like that on significant volume, wait about 3 days. Wait 3 to 4 days and see what's going on before you jump in there. So that's where I was just a little yancy. I missed the move, and I said, all right, you know what, I'm going to hit this on the backside, which right now I have a break-even stop in, and worst that can happen is I break even and I'm actually up right now. So that's a good thing, and what I'm doing is just letting it ride. I'm letting it ride down to this area. Now at 46.27, I'll be closing that, and I'll take my profits if we get down to that area. But to me, it's worth the risk right now because we were so overextended. I just want to see what happens. And guys, I'm just being transparent with you. That's my position. Remember, I'm not your financial advisor. Don't do things based off of me. Okay, you do your own research, do your own things. But that's just what I like to do. If I miss a move like that, I'm going to hit it on the backside. Or same deal, if we have a massive drop, I'm going to hit a reaction. So that's what's nice about being able to trade both sides of the market. And that's where studying all that, guys, it really pays off. And that's where you need to dig into those books and really understand shorting. So next thing I want to throw on there is the RSI. Let's take a look, see if we're having any divergences, anything like that. All right. So we got very overextended as well here, guys. On the 1 day, we're at 78. 70 is overbought in the traditional market. You know, cryptocurrency can go overextended. We can get all the way up to 96, 97 on the 1 day. We've seen it before in some coins. So could we make a move up from here? Absolutely. And that's why I have my break-even stop in, guys. That's why I put that in. So the worst that can happen is, hey, you stop out and whatever, and you cover your fees. Put it a little bit closer, cover your fees, and there you go. And that's, you let it run if it does well for you, and if not, you cut it and you move on to the next one. But we're definitely having that hook right there, so we're losing some strength, and that's just indicating of what you're seeing here, the profit taking in this candle. But we still have to wait to see where this candle closes today. I can't emphasize that enough. It could get sucked right back up now, guys, and we could keep moving to the upside. Anything is possible in cryptocurrency. No one can tell you when one of these whales is going to come in. My time, I believe it was like 4 in the morning or something, and at 4 in the morning, I'm sleeping. I wake up at 5:15. I'm in a deep sleep. I'm not setting alarms for a whale coming in. I just can't do that. I have too many things going on in my life. I need to sleep. I need to run my other business, so I can't watch this market 24/7, and that just is what it is. So, you know, guys, and that's one of those times that I was using one of those free solo basically stop losses. What I said was the risk to me, how much I was risking, was worth the reward. We were very overextended, and I said, you know what, even if it pushes up more, I'm not going to get stopped out. I'm just going to let it calm down itself because I had a good distance. I didn't over leverage myself, which a lot of guys over leverage themselves and they get in a lot of trouble. So it actually worked out well. It got up to about right in here, guys. I think a little lower. I saw it and I just said, you know what, I'm going to let it ride. I'm going to stick to my plan, and so far my plan's been going all right. But have a plan to the upside, have a plan to the downside. I can't emphasize that enough. Keep your eye on these things, the RSIs. You can click through, you know, go through the 12-hour, the 8-hour, the 4-hour, and look at that. But pay attention to this Fibonacci, and I took this Fibonacci off this trend line break for a reason, because that's one move in itself. And I just want to see where we're going to pull back to. Right now we're on that 0.382, which is it's a hot spot, guys. We definitely can pull back into that area. That can happen. You can pull back right to there, and then we would move higher. And to the upside, if I can do this quick for you, I'm going to get this Fibonacci off. Now to the upside, this area where we got rejected, you see where this was basically a little bear flag. We had that big push down on volume. We moved sideways, and then we just fell. And that's not even so much a bear flag. There really wasn't enough days there, but we'd still consider that. It was just that temporary pause before getting flushed down even farther. You know, and always calculate this. What I like to do, I'll put this price range indicator on. right here, and we'll measure this drop. So it dropped 52% there, guys. Look at that. I mean, that's a massive drop. So that can also happen on the backside. Remember, if we can fall that far that fast, we can make it up on the backside. So that's why you always do want to be prepared. I'm telling you guys about my stop loss because I was playing a small position. If you're playing big positions, guys, really use those stop losses so you don't get liquidated. I've seen and heard of horror stories. And when people get into trading, a lot of times they'll lose in the very beginning, and that's why I just want to play small positions so that I can really learn this like a paper trading, and I can accumulate knowledge from this without putting a lot at risk. And really the first 2 years when you're learning and studying all this stuff, you don't want to be playing huge positions. You want to be paper trading or doing small positions, and that's what I'm doing, is the small positions, because I do want some money on it so that I'll take it more seriously than if I'm just paper trading. If I'm paper trading, I'd obviously take more risks than I would if I'm putting money in there. But you know, guys, these are just some of my things, some of my thoughts. I appreciate you being here with me. If you could, like, subscribe, hit that notification bell if you like what we do here. Remember, we're just going to tell you the upside, the downside. You formulate your own plan. I'm just going to show you, you know, up here, this is going to be a resistance area I'm going to be looking at, and then the 6,000 is going to be a massive overhead resistance. There's probably going to be some bearish stock in that unless something crazy happens. So that's just my thoughts, guys. Take care. God bless each and every one of you. Have a wonderful day. Push yourself hard. Don't ever let anyone tell you you can't do something. Go for it. Take care.